Let's say in 10 or 20 or 30 years, Bitcoin has run to $1 million per coin. At that point, you could borrow Bitcoin out against your policy. It would be worth $1 million, but its cost basis would be $1 million. Even though you paid it into the policy at 67,000, its cost basis would be $1 million. So you can borrow it out, sell it immediately, have $1 million of cash to go buy a house or do whatever you want with it, but you wouldn't know any capital gains on that sale. Now, the other key to this loan feature is that because the loan itself is in Bitcoin, not dollars, and the collateral is in Bitcoin, so it's actually better for our policyholders if you believe in the 4-year cycle or you think that you can time the market. This is not advice to do that, but if you think that those are things you can do, it's better for you to take out a loan when the price is high, and then if the price of Bitcoin drops, you can just buy back a cheaper Bitcoin, repay your loan, be made whole, and then keep that spread for yourself for free. If Bitcoin does the opposite, let's say instead of crashing, it doubles.
And so we brought up the word yield, right? And
Yes.
in Bitcoin, that's always raises question marks.
Yes.
So where does the yield come from? All right, Danny, hello.
Rob, good to see you.
Good to see you. Yes. So you're with Meanwhile. Could you please tell us about Meanwhile? What do you guys do?
Yeah, so Meanwhile is the world's first and only licensed and regulated life insurance company that operates in any digital asset. And we are exclusively in Bitcoin, which hopefully should sound good to Bitcoiners out there. But what that actually means is we have a life insurance company. It is in Bermuda. This is where I make the important caveat that Bermuda is not the Bahamas. Bermuda is like life insurance capital of the world. 70% of the island's GDP comes from insurance and reinsurance. And that company in Bermuda, you can think of it as its functional currency is Bitcoin. So its balance sheet is exclusively Bitcoin. We actually don't let it touch any other fiat currency. We don't let it touch any stables or any other digital asset. It's all exclusively Bitcoin. We think we're the only company in the world that reports our audited financials in Bitcoin. You can imagine how ridiculous our financials are like. They're stated to the Satoshi, so it's like 9 decimal points per line item. And then we do all of the math that insurance companies do, like reserving and solvency calculations. It's all done in terms of Bitcoin. So what that gives us the freedom to do is not actually care about the day-to-day price volatility of Bitcoin. All of our ins and outs and assets and liabilities are matched 1-to-1. So I get to just think about one Bitcoin as equaling one Bitcoin, and we don't think about it in terms of $67,000 or $10,000 or $100,000. So we're a life insurance company. We operate on the Bitcoin standard. And so we bring to market life insurance products, which in almost every tax jurisdiction around the world are subject to advantageous tax treatment because governments want their citizens to have life insurance. They think it's a good thing for their citizens to have. And similar to our company, those products are denominated in Bitcoin. So their functional currency is Bitcoin. Our first product at market today that we're selling is a whole life insurance policy by which our policyholders pay their premiums in Bitcoin. The policy grows or accumulates value in Bitcoin terms. If they want to tap into the policy for liquidity during their lifetime, they can borrow against it, borrow Bitcoin out. And then when they die, they pass Bitcoin on to their heirs or to the beneficiaries of the policy. And I can dig into the mechanics of all that. But so you get all the tax advantages of life insurance plus the upside appreciation potential of Bitcoin tax-free as well.
Wonderful. So what kind of customers do you have as policyholders? Who comes to you for this?
Yeah, so we have, I would say, two broad profiles of customers. One that we call people who are rich because of crypto. So if you were mining Bitcoin in 2013 or bought your first Bitcoin in 2012 or made your money through crypto, that is one profile. Those people tend to be a little bit younger. Maybe they're single or engaged, or married with one or two kids. They may not have super sophisticated trust and estate planning. Maybe the wealth is kind of newer to them, but that's one profile. The second profile, people we describe as rich and then own some crypto. These folks, it's maybe the son convinced his dad to buy a Bitcoin or a couple Bitcoin. They maybe don't know how Bitcoin fits into their overall portfolio as well. It's just an asset that they own. Maybe they don't want to have to deal with self-custody, and so our product is actually a good custodial option for them. But they tend to have more sophisticated planning done in place. They may have trusts that hold their assets. They may have already own life insurance for its tax benefits. So they actually understand the whole life insurance product better in many cases because they already own some in the fiat world. And this is a way to take Bitcoin, which is an unfamiliar asset to them, and put it into a structure that they better understand. Mm-hmm. And maybe more importantly, that their accountant and trust and estate attorney and family understands better as well.
And so what does one of these policies look like for the average Bitcoiner who has some Bitcoin, they want to put it to work, and they come to you and you onboard them? What is that process like? Yeah,
it's a great question. So the process itself is very straightforward. We do everything online. We don't require anyone to go see a doctor or to get blood work done. You apply through our web portal or our website. You basically create an account, and then all of the information flows through your account in our portal. We don't do any outside paperwork for information security purposes. We are binding policies today for Americans, U.S. citizens ages 18 to 65. We actually just recently got approval from our regulator to go international. So if you're in the UK or in Canada, we'll be coming to you soon, and then we'll be breaking out broader from there. But from a policy perspective, the policies that we're selling today to U.S. citizens, it's called a limited pay whole life policy. I won't go do the full life insurance 101 for your listeners. Hopefully we'll spare boring some of them, but whole life insurance is appropriately named because it lasts your whole life. There's term life insurance where you buy it you buy coverage for a certain term of time. If you die during that term, the payout goes to your beneficiaries or your family. If you outlive that term, then you basically pay for coverage that you never actually get to benefit from. That is not what we have. We have whole life insurance, appropriately named because it lasts your whole life. So whenever it is you do die, if it's tomorrow or 60 years from now, the payout will go to the beneficiaries of your policy. And then the other part of the name is limited pay. So limited pay whole life. Limited pay just means even though the coverage lasts your whole life, we don't want you to have to continue to pay every year or every month for the rest of your life for the coverage to stay in place. So we've structured ours as what's called a 10 pay. You pay over 10 years in 10 equal annual installments. And then after 10 years, you're just done paying and your policy remains intact and in force for the rest of your life. So you asked for an example of a policy. I'll use round numbers because I'm not very good at math. So let's say there were a policy where a policyholder were to pay 10 Bitcoins of total premium. Now they're paying in 10 annual installments over 10 years, so they'd pay 1 Bitcoin per year for 10 years to pay the 10 total. If they were paying 20 Bitcoins of total premium, they'd pay 2 Bitcoin per year for 10 years. If they would pay 1 Bitcoin total, they'd pay 1/10 of a Bitcoin per year for 10 years. To use the example of 10 Bitcoin total premium, depending on how old they are, how healthy they are, if they're male or female, it all goes up. That's all information that goes into the medical underwriting. But a 10 Bitcoin of total premium might be something like 15 Bitcoin of face amount. Face amount is the amount of money that we're promising to pay out when you die. Those ratios change depending on your medical underwriting, but that's a good ballpark. So there are 3 just key main benefits of whole life insurance. And these aren't unique to us. These are the same things that a Northwestern Mutual rep or a New York Life rep would be talking to you about if they were selling you whole life insurance. Ours just happens to all be in Bitcoin. It functions in Bitcoin. The mechanics are in Bitcoin. But That payout, the face amount, in the example that we're talking about here, 15 Bitcoin, that is a flat guaranteed payout. It doesn't matter if you get hit by a bus tomorrow, or if you live for 60 more years, you know that your beneficiaries of your policy are going to get paid out 15 Bitcoin, which is a pretty good deal in the early years because you're only paying 1 Bitcoin per year for 10 years. So if you pay your first Bitcoin today, get hit by a bus tomorrow, bad outcome for everyone because you're dead and we have to pay out 15 Bitcoin and you've only given us 1. But there is true protection there. There's true coverage there that you're going to pass on more Bitcoin to your family than you otherwise would have. The second benefit is in whole life insurance, there's this concept of a policy value that grows or accumulates over the individual's lifetime. In traditional world, it's called the cash value of the policy. We don't deal with any cash, so we don't call it that. We refer to it as either the surrender value or just the policy value. But it's the same concept. There's a rate of return, and the policy grows or amortizes up to that face amount over your lifetime. And the benefit of whole life insurance is that growth, that rate of return compounds tax-free. And because everything that we do is in Bitcoin, it's like you're getting yield on your Bitcoin, but you wouldn't owe short-term capital gains tax or income tax on those returns. It grows tax-free. And then the third benefit, and I think, Rob, for a lot of people, this is the big one, is you don't have to wait until you die to get the benefits of this policy. You can tap into the value of the policy, the value that's growing tax-free over your lifetime. You can tap into the value for liquidity during your lifetime by using it as collateral to borrow against. Now, in whole life insurance, you can take out tax-free policy loans, which just use that policy value as collateral. And because everything that we do is in Bitcoin, our policy, because the collateral itself is Bitcoin, you actually borrow Bitcoin out, not dollars out. Now, this is important for a couple of reasons. The first is, when you do that, you're not taking a Bitcoin that you paid in out. You're borrowing out like a new Bitcoin. So you're getting a new cost basis on that Bitcoin. So let's use an example. Let's say you paid in all of your premiums today at, I think it's like $67,000 or something per Bitcoin. Let's say in 10 or 20 or 30 years, Bitcoin has run to $1 million per coin. At that point, you could borrow Bitcoin out against your policy. It would be worth $1 million, but its cost basis would be $1 million. Even though you paid it into the policy at $67,000, its cost basis would be $1 million. So you can borrow it out, sell it immediately, have $1 million of cash to go buy a house or do whatever you want with it. But you wouldn't owe any capital gains on that sale. Now, the other key to this loan feature is that because the loan itself is in Bitcoin, not dollars, and the collateral is in Bitcoin, you're never at risk of getting margin called or getting blown out of your collateral if the price of Bitcoin drops. Now, if I borrowed dollars against my Bitcoin and the price of Bitcoin dropped, the lender would sell my Bitcoin collateral to make themselves whole in that loan. But because everything's matched in Bitcoin, you don't have that mismatch. You don't have that volatility. So it's actually better for our policyholders if you believe in the 4-year cycle or you think that you can time the market. This is not advice to do that. But if you think that those are things you can do, it's better for you to take out a loan when the price is high. And then if the price of Bitcoin drops, you can just buy back a cheaper Bitcoin, repay your loan, be made whole, and then keep that spread for yourself for free. If Bitcoin does the opposite, let's say instead of crashing, it doubles, it's nice because our loans don't have like a term to them. So you actually never have to repay the loan. And you can just let the interest accrue over your lifetime. And then when you die, your outstanding loan balance plus accrued interest just nets out against the death benefit that goes to your family. So instead of getting 15 Bitcoin when you die, your beneficiaries would get 15 minus whatever your outstanding loan balance is.
And so is there a time limit? Like, do you have to wait a certain amount of time before you can take a loan out against your policy?
Now, I wanted to quickly interrupt today's interview to give a massive shout out to our lead sponsor, Rhino Bitcoin. Rhino is a Bitcoin banking solution that combines traditional financial services with the power of Bitcoin. Created by Bitcoiners for Bitcoiners, Rhino offers a range of different services. You can buy Bitcoin, you can sell Bitcoin, you can withdraw straight to cold storage, and you can even pay other people using the Bitcoin Lightning Network. You can also purchase gift cards with sats at the click of a button, and you can even connect a multi-signature setup to Casa, all by using the Rhino application. Additionally, you can even send cash globally to your family and friends using Rhino, and soon you'll be able to pay bills, borrow money against your Bitcoin, and even save Bitcoin for your retirement, all in the one seamless application. You guys can visit rhinobitcoin.com to download Rhino today and experience the future of Bitcoin banking.
Yeah, great question. So there is a 2-year period where you're not allowed to take out a policy loan. That's actually an anti-money laundering tool that our regulator has had us put into the policy. It doesn't make a huge difference because in the first 2 years, your policy value hasn't grown very much. So the collateral against which you would borrow is not very much. But yeah, it's a good point to make, is that there is a 2-year period where you aren't able to take out that loan. And then after the 2-year period, we will lend up to 90% of the policy value at any given point in time. So as the policy value grows, you get more and more loan amount available to you to borrow out. And a 90% LTV is pretty much, I think, unmatched across the industry.
And so we brought up the word yield, right? And
Yes.
in Bitcoin, that's always raises question marks.
Yes.
So where does the yield come from?
Yeah, it's a great question. We built this company as a financial services business for the Bitcoin economy. That statement makes a couple of assumptions. A Bitcoin economy can only exist if Bitcoin is money, not gold that's buried in the ground or on a hardware wallet in your backyard. Money has velocity, money has utility, money has real world utility, and there need to be financial products for which you can use it if an economy were to exist, and there need to be capital markets. And most importantly to us, there need to be debt capital markets. So we get the yield or the return on the Bitcoin by operating what I describe as a hyper-conservative private credit direct lending business. That's a complicated way of saying we take Bitcoin and we lend it out to big institutional borrowers. We lend to people like big custodians or exchanges or market makers, Bitcoin miners, and we may lend to like institutional hedge funds, not crypto-only hedge funds, but like big hedge funds that if they have a little bit of digital asset business, but if we can collateralize against non-digital assets, we may lend to them if they're otherwise rich. And this is an important piece because A, we've been doing this for a little over 2 years with the balance sheet of the insurance company. We have 0 credit losses to date. Now that 2-year period includes BlockFi, Genesis, Celsius, Voyager, FTX all going bankrupt. So to have navigated that 2-year period without any credit losses, I think is just a testament to how conservative we are with the loans that we're making. But we're actually very uniquely situated in the Bitcoin space. We're building this financial services company for the Bitcoin economy. Life insurance companies play a really important role in the infrastructure of economies. There's a reason that every high-rise in Manhattan is owned by a life insurance company. Life insurance companies have very long-dated liabilities. Our average policy probably won't pay out for like 40 years. So our liabilities are very long. So that means that we can be duration seeking in our investments. And because we have a very low hurdle rate, we can be very conservative and long dated. So we view ourselves as playing a really important role in being permanent capital providers to builders who are building what will become some of the most consequential companies in the Bitcoin economy. So it's really exciting to be doing that. We are believers that the risk-free rate of return in Bitcoin is 0%. anyone who tells you they can get, risk-free 5% or 10% or 15 or 20%, they're probably lying to you. And there are risks in anything that you do in Bitcoin. So we make all of our investments through that lens. We all of the loans that we make, we're negotiating like 90-page master lending agreements with all these covenants of where we are in a bankruptcy stack and what our collateral is, whether or not we have a parental guarantee. Always start with the basis of the risk-free rate of return is 0%. So how can we get most comfortable lending to the best credits in the space with terms that we can kind of wrap our arms around?
Mm-hmm. And so we're here in Nashville, and you were just at Industry Day yesterday. And so what was the reception like? What were people asking about the first Bitcoin-denominated life insurance company?
Yeah, it's been really exciting. It's been exciting to be here in Nashville. I think it's been really inspirational to talk to so many of the people building or investing in the space. And as I just touched on, we view ourselves as being uniquely situated to be able to provide working capital to those companies that are building some of the most consequential businesses that will define the Bitcoin economy over the next 5, 10, 20, 25 years. And I think the reception has been really, really great. We at the peak, I'm going to get the number wrong, but the Bitcoin market cap, I think, capped out at something like 1.4 trillion or something. And when you think about what that means, it just means that incredible wealth has been generated by this asset and this asset class. And until now, people didn't have anything they didn't have any tools to be able to plan with this wealth that's been generated from Bitcoin. If they're sophisticated, they put it into a trust, but they have this incredible potential for even future wealth creation, and they haven't had very basic financial tools to plan with it, to set themselves and their families up for generations. And what we've done is we've brought to market really the first financial product for people to use their Bitcoin to plan not just for their lives, but for their children's lives as well. Mm-hmm. And we think that that's something that's really exciting. And there are, as we touched on, benefits to the policy during your life as well. So you're not just putting it into an irrevocable trust that you can never touch again for the benefits of your kids. You're actually, in some ways, getting your cake and getting to eat it too.
Yeah, that's great. And so you just went international, right? Or you just got out of the sandbox. So is life insurance looked at differently around the world? Do different countries have different customs and regulations and how it's treated?
Yeah, it's a great question. We're really excited. We work with a great regulator in Bermuda. I touched on Bermuda as like one of the world leaders in insurance and reinsurance regulation. You go to Main Street, Hamilton, Bermuda, and it's like Chubb International and AIG and Athene and Brookfield's insurance company. Bermuda is an interesting place. It's like an island of actuaries and lawyers who wear knee-high socks and Bermuda shorts and blazers. But so we got our license, our preliminary license in what they call their innovation sandbox in December of 2022. We've been operating there since then. And then we just recently found out that we've graduated from their sandbox and we are a fully fledged life insurance company. And with that comes the ability to go international. We had been restricted to only sell to US citizens. So one thing that we have been doing in preparation of this didn't come as a surprise. So as preparation, we have been doing market research on different tax jurisdictions around the world. People buy life insurance for different reasons, depending on where you are. In the United States, whole life insurance is primarily used for its tax benefits and intergenerational wealth transfer. In other parts of the world, life insurance can be used as a means of getting assets offshore out of your country, or buying assets in a different currency than your local fiat currency. So it's very common for people in Argentina to buy life insurance denominated in the dollar or in the euro so that they can get out of the Argentine peso. And this is where we see such a huge opportunity for our company. You know, Zach, our co-founder and CEO, has this line that we want to be a life insurance company that services a billion people around the world. To be able to service a billion people, you need digital money to reach them, and you need AI or technology to be able to service them profitably. And so we think that if you're middle or middle upper class in Argentina, in Zimbabwe, in India, it makes a lot of sense to denominate your life insurance, which is a long-term asset, in the world's hardest money, as opposed to your local fiat currency, which in many of these cases is subject to hyperinflation or regime risk, geopolitical risk. You know, we think that there's great opportunity there.
Yeah. And as a Bitcoiner, if you're going to hand over your keys, you're worried about custody. So could you talk to us about what the custody?
Yeah, of course. So in an ideal world, we're Bitcoiners at our company. In an ideal world, we would allow everyone to keep their own keys, and there would be no hypothecation of Bitcoin, and we wouldn't have to get yield. We do everything that we do because we have to do it to be classified as whole life insurance under the Internal Revenue Code. So there is a Internal Revenue Code 7702 defines what it means to be whole life insurance and what you need and the different requirements you need to satisfy to be considered whole life insurance. So our product is 7702 compliant, but that mandates that it is a general ledger product, which means that we have to receive the Bitcoin. We have to do the dirty word in Bitcoin, which is rehypothecate everyone's Bitcoin together, because then we have to get a return on the Bitcoin. There's actually a rule in the United States that there is a minimum required return to be considered whole life insurance. Back in like the 60s and 70s, people were buying life insurance and they were like putting their yacht in it as a tax wrapper. And the IRS said, wait, hang on, this isn't the intended use of life insurance. So they required there be a minimum rate of return, which we actually have set our product at the legally minimum, because we do believe that the risk-free rate of return in Bitcoin is 0%. So we've set it as the legal minimum return, so that we can be as conservative from an investment standpoint as possible. But we use Anchorage Digital as our custodian. We think that they are best in class from an institutional custody provider perspective. So every time a policyholder buys a policy, we generate a unique vault address at Anchorage for them to send their premiums to. And so as soon as we receive your first premium payment into the Anchorage vault, the policy is considered bound and active. So yeah, we use Anchorage. When we go international, we have already started due diligence on additional custody providers. I think that it's good practice. It's prudent to have diversification of custodial providers. So we're going through that process currently, but for our purposes today, we think that Anchorage is doing a great job.
Cool. Well, I think you about covered it all there. Is there any message you would like to give out to Bitcoiners who might be interested in this product? How can they reach out to you and get in touch?
Yeah, great. Well, first, Rob, thanks for having me on. This has been great. I think that it's important just to note that we recognize anytime someone buys life insurance, it's not like you're going to the store and you're buying groceries. It's a long commitment, and it's an arrangement that we take very seriously. People are buying our product to help provide for their families intergenerationally. They're putting a lot of trust in us, and there have been bad actors in this space. So every time someone signs up, our website is meanwhile.bm. BM is in Bermuda. And there's a big button that says get started. You click that button, you essentially create an account. And then once you create an account, someone from our team, probably me, will reach out to each person that signs up, and we want to have a one-on-one conversation. We want to make sure that nobody is going through the process without getting all of their questions answered, because we do take this really, really seriously. So we will have one or as many conversations as is necessary for a person to feel confident and comfortable that this is the right thing to do for themselves and for their family. And then we work really hard to make sure that we're all set up for success. So I think that if anyone's interested in learning more about ways to leverage their Bitcoin for themselves and for their family, to go to the website. There's not a ton of information there, but if they click that Get Started button, I or someone else from our team will reach out to them, and we'll look forward to answering any questions they might have.
Perfect. Well, thank you for your time.
Awesome. Thanks, Rob.
It's good chatting with you.
Yeah, this is great.